What's going on, guys? Welcome back to another video. In this video, we're going to be talking about NIO and how it is very possible that in the near future, NIO can get all the way up to the $100 price point. I'm going to go and do a in-depth analysis of just how possible it is for NIO to go this high. So make sure you stick around so you can see all of that information. We're also going to go over all of the other news for NIO. So if you guys enjoy this video, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones. So if we go over and take a look at the chart of NIO, we can see that basically it had a pretty substantial run up all the way up until NIO Day, and then had a pretty significant sell off throughout the week after everybody kind of settled in and kind of knew all of the news that NIO had already put out. But the run up from before NIO Day was very substantial. It went from around $44 to $63.50. That's a very big run up for a company that doesn't have such a high share price. Now, as you can see on Friday, NIO had a very tough day, going down around 7.5%, and the main reason for this was this right here. So Foxconn had appointed Jack Chang, co-founder of Chinese electric vehicle startup NIO, as head of MIH, its open software and hardware platform for developing electric vehicles. Now, Jack Chang hasn't really been at NIO for the past couple of years, but he has a lot of experience in starting up an electric vehicle company, so it's going to be interesting to see how this plays out and if NIO will keep selling off throughout the week. But in general, long term, I think NIO is going to be an unbelievable company, and it is going to go to 100 in the next 1 or 2 years, even sooner if they can come out with new technology, and I'll show you exactly why right now. So if we go over here, NIO stock could jump to nearly $100 per share. So this was an article put out by Investor Place, and they're basically doing an in-depth analysis of NIO in terms of its revenue and growth in terms of its delivery numbers. Now, I've said in the past that the delivery numbers and sales numbers of these electric vehicle companies are important, but they're not the end-all be-all when it comes to valuing these companies and giving the companies a fair valuation. If you take a look at Tesla, they're valued at around over $1 million per car sold. So a lot of these valuations have to do with the technology that these companies are putting in their vehicles. So we can take a look right here. The purchases of NIO stock have re-accelerated. Each time NIO has posted its quarterly results, its trading volume has surged in the following weeks, sending the stock higher. Those gains in turn have allowed the company to sell more of its shares to raise capital, diluting investors and temporarily lowering the stock price. Now, this isn't really that big of a deal. NIO is using all of these funds to expand into the European market and to put more better technology into their vehicles. We saw at NIO Day that they came out with the 150 kilowatt hour battery, and that's going to have a range of about 1,000 kilometers, which gives NIO the top spot in terms of range out of all the electric vehicle cars in the world today, which is pretty amazing. If we take a look down a little bit further, NIO posted astonishingly good December 2020 fourth quarter and full year 2020 deliveries. It delivered 7,000 about vehicles in the month of December, up 121% year over year. In quarter four, it delivered 17,000 about vehicles, up 111% year over year. Overall, NIO's delivery numbers and sales numbers are up 100% on the year, which is very important. They also have their battery as a service program, which really makes the cars more affordable because you don't have to actually buy the battery outright. You can kind of pay monthly for a subscription in order to have the battery. So as shown below, NIO's market cap is higher than many of its peers in China. So if we take a look at this, Nikola, we can't really count Nikola. They really don't have any sales. They're a pretty terrible electric vehicle company right now. XPeng is a pretty good company. I'd say that they're number 2 in China, and their market cap is around 32 billion. And then we can go down here to LI Auto, 30 billion, and then NIO is about 91 billion. So for NIO stock to reach nearly $100 per share, NIO's revenue will need to double or triple in the next 3 years. Now, that's important because NIO, it looks like they're already doing that. If we come back up here, NIO's growth in terms of the delivered vehicles is up 111% on the year. Now, this year was a pretty bad year just in general. general for consumer spending. So if NIO can go up 111% in a year where not a lot of people are spending money on luxury vehicles, then I think NIO is going to have a very good shot at reaching this goal of $100. So in order to come up with this valuation, they're only valuing the NIO sales numbers, and that's very important. There is no mention of this in this article about their technology and what NIO could possibly come out with in the future. Whenever NIO releases something like insane, like their new battery, a new vehicle, the share prices surge. As you can go back and see over here, we can take a look at this chart, and we can see that NIO has had a very substantial run up over the past couple months. And it's so if we look at the $25 mark right here, it rallies all the way up when it had its very substantial run up and then kind of settles down. And then once the next set of news or event comes out, it rallies really high and then it kind of settles down. So it's kind of forming these low water marks, and it rockets up, comes back down, finds support. So each time it goes up a lot, you can kind of make the assumption that it's going to make a higher low in the near future when it has a pullback. If we go back over to this Investor Place article, it says that this model uses the perpetuity growth formula to calculate NIO's terminal value after 5 years, and it's using the Gordon growth exit model. So if you don't know, if you haven't done any financial analysis in the past, the Gordon growth exit multiple assumes that a business will be sold for a multiple of some market metric. So usually the Gordon growth model assumes that it's basically going to be valued based on its cash flows. So if you have any experience in real estate, you can use cap rates and kind of figure out what the value of a property will be in terms of how much cash it generates. But if you use the exit multiple, you're finding the terminal value of the business, which is basically it's assuming that a business will grow at a set growth rate forever after the forecast period, and the terminal value often comprises a large percentage of total assessed value. So that's important when looking at how they're exactly valuing this company. It's just an estimate, but again, it's only on the revenue numbers. So if we take a look down here, we can see exactly what they're predicting for the revenue. They're kind of going back and taking a look at the revenue growth that NIO has seen, and they're kind of multiplying it out into the future and using discount rates to figure out what the revenue of NIO is likely to be in the future and the percent growth. So if we take a look down here, NIO stock can climb further if the company's delivery growth continues to come in above its historical average. I think it's very possible that NIO will be able to have delivery growth above the historical average, especially if they can get into the European market. NIO has a lot of positive things going for it right now in terms of possibilities for delivery growth. Their new ET7 model that they announced on NIO Day is going to be a direct competitor of Tesla in the Chinese market and maybe in the European market once NIO dips its foot in there. So basically the ET7 is going to be a very similar model to the Tesla sedan. So Tesla has said that about 47% of all of its vehicle sales will come from China in the coming years. NIO already has a very good relationship with the Chinese government, and China kind of wants its own homegrown electric vehicle company to succeed in their own market. They don't really want another company coming in and kind of stealing the market away from their own company if they can avoid it. And right now, the majority of NIO's sales has only come from the Chinese market right now. If they can break into other markets, we're going to see NIO's delivery numbers go through the roof in the coming years. So we might see revenue numbers that are higher than this chart right here. And that's just delivery numbers and revenue. They could keep coming out with new vehicles, new technology. This prediction for NIO right here, that it is going to be between 90.75 and 110.30 in the next couple of years so this uses a 5-year discounted cash flow model. I think it could go a lot higher than this. I think we could see 120 or 150 in a shorter amount of time than this model predicts. I think this is a pretty reasonable model. It's not really too aggressive, and it's not accounting for the technology that NIO is putting in its vehicles. So if we go back over here, NIO is currently trading at 55.27, so it's basically going to have to double in order for it to hit 100. So that's going to be it for this video. If you guys enjoyed what I had for you in this one, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and I get to grow on this platform while you guys get to find out more about your favorite stocks and learn about a couple of new ones. If you guys enjoyed what I had for you in this one, go comment down below your thoughts on if you think NIO can reach 100 in the near future.